Good morning. All right, let's see where things are at here. So markets are up here a little bit. You can see the bottom right chart, the spiders there, the pre-market action, where things went down a little bit near the end of the day and overnight popped up here a little bit. And there's some resistance to the left there that's dealing with for a few hours. So going into today, right, question is, can it get above this area? And if it can, then we should see things go higher. And of course, the question becomes, as you'll see on the futures, we're getting a green bar. Is the correction over? Well, it could be, but I personally don't think so. You can see I've measured here from the high down to where yesterday, well, a little bit below yesterday's close was about 7%, which is down in this area of price support. And here's the rising 50 MA. And the reason I don't think so is this weekly chart. Now, it could continue to go lower down here, of course, after some stabilization, and that would be about a 10% correction down to that area for the S&P, which would be normal. And I think that would be a good area, meaning it's a larger area of price support. And a deeper retracement and so on. And it would be more in alignment with the weekly chart as a reasonable bull market retracement to support where buyers would be willing to step up. Remember yesterday I spoke about corrections and wide ranges and range contracting and so on. And the location where those range contractions occur, where we get patterns that are reversal patterns, where supply and demand meet each other, where sellers now have kind of temporarily, in the moment we don't know for sure, have exhausted themselves, and buyers where they are willing to increase their demand and feel more comfortable in that area, that this is a reasonable location to start to accumulate again. So, well, we're getting some stabilization here this morning, and it's very early. And we could get a bounce up because even when eventually, wherever a correction takes itself, there's almost always some kind of stabilization. Where it looks like things are going to turn around. And then we see, does it fail? And that's what we call continuation patterns, which we may see occur, today into tomorrow. And of course, Friday, do we get a continuation pattern that then follows through lower down into this area? So as prices fall down to one level, our expectation is, okay, we see some stabilization at that level. And again, we look at the futures, that's what we're seeing happen. Now, today is Wednesday. Besides it being MT Live, it's zero expiration day for SPX and spiders. So if spiders can get above, SPX can get above this level, right, this trading here from yesterday, down below here should be a safe zone. And I say that because prices have fallen a considerable amount over the last 3 days, and they're stabilizing here. You've got some pre-market congestion. And if they can clear that, that has then created an intraday level of price support. That'll be used by those trading, S&Ps as support. So that kind of is one of our first lines of protection, where buyers would step up. And then we got yesterday's low as a second line of protection. So going below that, just based on the information I have, and of course, getting above this level, not, market opens up and then this starts to drop down here, but then we don't know if it's going to hold. Could go down a considerable amount and then pop back up again. Anyway, after falling for several days into this area and the rising 50 MA, even if it falls under here, I would be thinking at the 10 o'clock reversal period or the 10:30 reversal period that hitting that 50 MA, things would turn around. So that's part of this, one of the scenarios as to, okay, this looks like it could go up. If it does, great. If it doesn't and it falls, that 50 MA should be a reference point. And so, however you do it on your system, right, set an alert on the moving average. And so even if you're looking at some stock that you're trading or whatever else, you use your tools. That's a tool. That kind of one of our ways of using the computer to do the work for us. We've only got two eyes. And so alarm goes off. You already know what that means. You're already creating your thought process for intraday activities before it even starts. And that makes it easier to think rationally as an intraday trader because things are moving relatively fast. Maybe you get a tick extreme. NYSE tick goes to an extreme. So all of these things help you during the trading day to make intelligent decisions. All right. So SPX, well, similar. You got your 50 MA. All right. Go ahead. You got your alert there. I already had that set. It's around 3,300. All right. So a whole number. That's good too. And we know prices are up here because where spiders are trading. And then can they get up here? And then you've got your two lines of defense. All right. So you see what Jake is putting down here. 34.25 on the upside. Well, there's nothing here. I guess that's a decent way to travel. 32.80. Yeah, 32.80 should be fine. Let me just post this to those in YouTube. All right, let's look at S&Ps. I always like to compare. So down below here should be fine. That already hit the 50 MA and is reversed. So back to our factory work, big bar there. And, you know what we do? We go in the middle of it, give or take, kind of eyeballing that. That looks like it's close to the middle. So big red bar. Does the reversal stay in the middle half? If it does, right, the bear case is still intact. If today's bar was to continue to move up and close up here, that would be impressive. We'll see what actually happens. Again, we've got this congestion area. Come on. Right there that it's coming into. Keeping an eye to see how this works out. As I can see, it's moving up here. So you get a breakout like this, even though this is corrected here and you got these bottoming tails telling the buyers are stepping up on the dip, to clear this resistance into the next area of resistance could be a bull trap. Breakouts into resistance typically don't work out very well. So just keep that in mind. Even though this part of the pattern looks good as to continue higher, it's just coming into the next level and the void is up here. We'll see if this is a breakout failure, right, and it comes back in, under this level here or down here. That's where you're going to want to consider the bear call side of that SPX credit spread. Breakout failure, something confirming that sellers are taking control, and you've got some kind of a failure up here, right, that will become a line of defense for that. Okay. All right. Qs. Down about 10% from the high. So the leader is down more than what was lagging. Makes sense. The way it ran up, it created a void. It's got a larger void to fall into, so falling further before buyers want to step up. And you can see it's in the area of this prior low, the 50 MA. All makes sense. Now it's reversing back up here. It's at let's just call it 275. 275. All right. All right. Pretty deep into yesterday's topping tail bar. Now it's a topping tail bar after falling 10%. So this kind of a bar, right? You're saying, well, topping tail bar, sellers took control of the on the move up. Fine. I don't know what today's going to end, but let's assume for the moment it's a green day and closes up here. That's going to point to higher. Then we'll just see how high it gets. The 20 MA would be a reference point of resistance. And, that candle body there tells me that there's price resistance there. So the moving average is the subjective reference point, and you'd look at the price area, and there's going to be something up there. So we'll see how this unfolds as to whether this could turn out to be some kind of a tradable low or whether it'll be a continuation pattern to go lower. That's the unknown, but it's fallen obviously far enough to where buyers feel some level of comfort to step up here and what they're doing. And looking at the futures here, you see the initial beginnings of a green bar, which is, I guess, about halfway into this bar. Looking at the 24-hour, about halfway right now, and up against this resistance here. And we'll see if this actually can hold up here. So things might be a little choppy here at the open. We'll see. A YM, obviously cut through that pivot, went down to minor support level, rising 50 MA, and halfway mark is lined up right at that pivot high there. So similar pattern of some congestion going sideways, a bottoming tail bar, clearing the highs, and coming up to the next reference point of resistance, similar to what the S&Ps are doing. And the Russell, right? Similar reversal, maybe got not quite to its resistance area, but that while it has some room to run, obviously it's showing relative weakness because it's not at its resistance area. Now the weekly chart doesn't look so bad over here, whereas the S&Ps look like they should come down more. This, while it's retraced deeply into this green bar, maybe by next week, if this is still going sideways here, I mentioned this in the video of the advisory letter, ETF, like if this was going sideways here into next week, it kind of begins to change the whole picture of this little bit more of a bearish correction mode here. So something to keep in mind. You always have to have two scenarios and look at what's happening bar by bar to guide you as to what is real in the moment versus what was real 2 bars ago, could be 2 weeks ago or 2 days ago or 20 minutes ago, depending on the time frame you're looking at. So bar by bar analysis is something that's going to force you to update information. So as we're looking for more corrective price action, even though this morning is showing some strength, if that corrective price action was to be sideways in the Russell, we have to start to change our bias that maybe that 10% correction in the Qs is enough, 7-8% in the spiders is enough. What's gone on here, and we're back to markets going higher again. So it's early. We'll have to see how it all unfolds. Bonds here, just flip-flopping around. They kind of look like they need to come down here before buyers would really feel comfortable, I think. And that could coincide, of course, with interest rates, would be popping higher, and you might get that as a reason for markets to continue to move lower. Oil that fell sharply. It's stabilizing here. And I got to change this contract. So anytime you see stabilization, you need to look to the left. There's really nothing to the left over here. So while it's beginning to create some support here, it's really not down to this lower level. It's in an area where buyers would really be more comfortable beginning to buy, which would be down here. So we'll see. Gold beginning to stabilize down here at this level now for the third time. And it's beginning to now form a trading range. And it's where we have, deeper pivot low, higher pivot low. This will become a pivot low if we get this day to complete here and then 2 more days. So we can see it's beginning to become a trading range, and you could be, keep an eye on this as considered maybe as an initial position. So looking at the 60-minute chart, what we would want to see is it be able to clear this area here. So now it's, this smaller range within this bigger range. You don't want to be buying into the top of the smaller range and then, this actually turning back into a red bar. So not a good place to be a buyer since it's coming up to the top of this intraday range. Silver, similar story. It's not getting above that high, but we've got the trading range, going on here. No void. And what happened with our transports? The laggard, right? A breakout failure coming in, held up okay yesterday. An inside day, sloppy, choppy stuff. Looks like the weekly looks like it could come down some more, and so there's some pockets of relative strength out there. Maybe Dan will cover some of that with you, some of these stocks, and so there you have it. Markets here are showing a little strength pre-market, coming up into some resistance. So we'll see if they stall or whether they're going to push higher, right, into this part of the void. Right. So we'll see how it unfolds as we always do. And, maybe some sideways price action here into 10 o'clock would support then moving higher. But so far, the size of this green bar anyway on the futures is a nice size. If it was to close this way, we'll see what things look like at 4 o'clock. All yours, Dan.
All right, thanks. Yeah, that's my exact bias is 30-minute high. Let's let it go sideways here a little bit more at resistance. But overnight futures, I was watching SPYs down 15 and then just slowly, the ES grinding their way back. And then this morning, the gap up, grinding higher also. So this is yesterday I was saying if we would close strong, then it was a tradable short-term bottom. But now it's better because now it's a reverse head and shoulders on the 15-minute chart, with this being the downside shakeout going sideways at resistance. If this were to go sideways all the way to 3 p.m., then this would be a no-brainer inverse head and shoulders breakout into the close. Big multi-hour left shoulder head. I don't have the right shoulder yet. It's just from pre-market, but all our opens are fine. I don't have any comments on them. Yeah, Gall and Azul are my two Brazilian airline babies, and Azul was definitely the better one. Jets, U.S. airlines are actually down in a strong market. We did not get filled yesterday in the put spread in Delta, so maybe this little gap down will give us a chance to get on board that. All right, Overstock. Look at this, 130 down to 62. That's quite a haircut. But it's right here in the gap fill, overshot the 50. I like the gap up. So over 30-minute high, I like it as a put spread. And for a long, If it closed strong, I like it. It's up to you how much risk you want in the morning. WTRE gap into 23. That gap's too big for me, but that's beautiful, beautiful trading range. GE, I just saw in the pre-market gap volume list. I was impressed with the volume on some of these pre-market things. So no pattern on GE, but it looks bearish all time frames. I mean, Tesla had 1.5 million shares pre-market. Bullish gap up, bullish pre-market. So this, if the market wants to go, ideally, as we said, 10 a.m. This Tesla's a day trade long. I saw Apple, total mess on the daily, but these fangs might be ready for a day trade long. I'm not touching these as a swing. They're a mess, total mess. I don't even like Netflix here as a day trade. I like the other ones better. All right, let's continue here. Nautilus, sloppy buy setup, gapping up, strong uptrend. That's worth watching. Neo was on the gap list, big volume, 1790. It's a sloppy buy setup, but I like the pre-market. That could be a day trade. Gapping up to 33 cents, which is a bullish gap. It had big volume pre-market. Amazon put spread. It's just not, I mean, sure, it's right there on support. I just don't have high confidence on this pattern. I sent out pre-market put spreads on Uber, Overstock, even USO. I know I wouldn't buy this as a long, but I like the rubber band stretch from the 20. If it can take out yesterday's high, I like this as a put spread. Work had earnings and it's getting killed. You know, we'll just have to, that's a bearish pre-market. It can't bounce. ST, I can't tell where you're gapping. Cuervo, 121. Maybe day trade, but it's gapping a little too big for me. It's eating into my target, but it could be a put spread for Friday if it holds 30-minute high. Coup, breakout failure. Hey, Greg, you know, all these breakout failures, that might be a great timely topic for MT Live next week.
Failure patterns, you know, just I think a broader title like that, but that's a good idea.
All right, sure. Yeah, make it easier because there's so many.
Yeah.
I mean, so many types of failure patterns, sure. All right, so I don't like the ones that slice through prior support like this. Remember Zoom? We did a put spread on that yesterday. We're getting a nice gap up. I already tightened the stop. So these are the types I want. If they're extended, pulling back on support. Dunking, I posted a put spread too, just major support play. Trill, 1378, it's a big gap up, but too big for me. William, Twitter. So that's an example of breakout failure. It came down too deep, although it is on support. And I do like the pre-market consolidation. It's right here at resistance. So I would say 30-minute high, day trade. But if we take out 30-minute high, I think we're going to have so many candidates. I actually like the Qs better, William. I'd just rather buy the Qs for a 30-minute high because it's that here at resistance going sideways. And I like the void because if it takes out yesterday's high, then next target is somewhere in the gap fill. So yeah, we don't want to be watching too many things or else we'll get distracted. But you know, I see Overstock here popping. Yeah, Overstock's a long candidate too. I like this one. Cliff, Pin. Yeah, it's going sideways. Yeah, Workhorse. Yep. We shorted a put spread on Nikola yesterday, doing a deal with GM. I read the deal. GM's going to help them, whatever help them means, with their electrical stuff in exchange for 11% stake. That sounds similar to, not similar, but remember basketball player joining their board of dunking, and I think he got a 10% stake. What a marvelous, marvelous paycheck. Just in joining a board, you get 10% of their company. Incredible. 49.50. This is a big mess. I'm just deleting you because I always want to narrow down my list. This one too got smackdown. So compare dunking, Zoom, etc. The control and shop. I mean overstock. Compare the controlled pullback versus this one bar smackdown. I don't like the one bar smackdown. I like this. It's I mean, there's, I don't know, you count them. There's over a dozen red bars, but it's more of a steady pullback instead of, the one bar smackdown. Space, it's right at resistance, Hector. I think we can find, it is a little downside shakeout, so it could be a put spread watch, but I have zero interest, gap in the resistance right here. Lulu, another popular stock. Bearish gap, bearish, so I'm not going to touch that, but it's on support, overshot the 50. And we just want to see when buyers want to step up. This was $400 a week ago. So let's just see what happens. HQY is sloppy buy setup. I think we can find better. ABM, we can find better. Lyft, yeah, they, I think, announced their ridership was down over 50%. And Khaled's talking about Uber. Yeah, I liked Uber better. Yeah, I mean, yeah. I posted it as a put spread pre-market. If you all don't get our alerts, you didn't get it. But I'll give it to you all again because I'm a nice guy. So that's what I gave pre-market. So it triggered already. Let's see where the midpoint is.